Welcome to episode 25 of Fish Wrap TV. Today is Friday, July 30th. I'm your host, Janie Hansen, filming your weekly market update with Q-Layer, live from Blue Earth, Minnesota. It was a pretty wild week, particularly in the financials, with the Fed, inflation, and the reverse repos. On our agenda here today, we'll discuss spring wheat, corn, beans, the inflation game that just keeps going, and we'll wrap up with a conversation about China. Q, what's happening in spring wheat?
Well, we had the spring wheat crop tour this week kicked off and came back with a 28.9 bushels to the acre average, which was higher than I really thought. It's about a 66% of what was produced last year. Okay.
So dropping about a third.
Dropped about a third. They've been crowing on Bloomberg TV about it being down a half, but of course, what does New York know? But at any rate, the numbers are that. The market didn't like it. Sold off again, today a bit. But it's really, we're at a kind of a danger inflection point with spring wheat because we got issues over in Russia with their spring wheat crop. We got no idea what's going to happen in our, Australia and Argentina in the south with the new crops, especially with the freezes down in the southern hemisphere. So it's really one of those things where we are definitely eating into, any kind of carryout we have, especially in spring wheat, and it's going to be a real danger zone next year trading spring wheat. So we've got at least another year or two of wheat trade where you're going to have to not go to sleep on your positions, especially in spring wheat. So the other thing is that hard wheat has made a move against Chicago, like we were talking about, but it's not the kind of move that I want to see yet. Okay, this thing is going to be real if hard wheat goes over Chicago. Okay, so that is the next milestone. The spring wheat spreads have tightened considerably here, especially in the 2021 crop. CEP has put about 30-40 cents on red CEP up there, so that's a pretty good number. Spring wheat, or hard wheat has started to move, but yet it's still unders with Chicago. So it's going to be real if KC goes over Chicago. So that's the next thing we're looking for.
Okay, keep eyes open for that. Is any of this price volatility coming over into corn and beans that we should be concerned about?
Yeah, a bit. We're getting ready for the crop tour in about 3 weeks for the corn and beans out in across the Midwest, whatever. The numbers keep coming for the corn crop being right at 180 bushels to the acre. I mean, if you want to get into a shitstorm on Twitter, all you have to do is just say, I think that there's just no way it's going to be under 180, and I guarantee you got 500 notifications in your grill about it, because that's what the real game is right now. What is the corn yield? And, are we going to get enough rain in August on these beans to really make a big difference? Because as you all, being a farm gal, that, August makes beans.
Yeah, you need those timely rains to really fill out the pods.
And around here, the beans are looking okay. But if we get rain, it's over. So, beans are one of those things where, August makes all the difference in the world. But, corn is corn. Much, much longer growing season. But the fact is that Illinois, from what I'm hearing, is the best they've had. So, if you look at the drought map, of course, it looks like, pure red up here in the northern tier, but yet there's nothing from Ohio to, all the way out to the Mississippi River. So, I'm hearing people in Illinois say it's the best crop they've ever had, and that's really saying something for Illinois, for God's sakes. But what we're seeing is these hybrids are continuing to perform. And they're continuing to respond. So I know we bitch constantly about, how much seed costs, but yet you're seeing, some results here. So it'd be interesting to do some math on, are these higher seed bag costs, does it really play out in the fields against adverse conditions? Yeah. So very, very interesting.
So shifting gears a little bit to the Fed, Jerome let the word persistent slip at the FOMC. That's the Federal Open Market Committee meeting this week when talking about inflation. Was that a Freudian slip, or does he really believe it?
Well, it's funny because, when I was at Transmarket up in the bond room, we had a poster of Alan Greenspan sitting in the Senate chair, in that meeting room, whatever the heck it is. And he, and he was going. Well, I guess we're going to take Don out to the horse, beat his ass. So,
live studio audience. Here we go.
Here we go. Anyway, there was a poster up on the wall at Transmarket Group of Greenspan. It says, "If any of you understand anything that I have said, then I've misspoken." And that's what these Fed meetings are: is they tease all these words. They're going word for word for what they're saying. It's just like like reading the Old Testament.
Yeah,
to some of these
hanging
guys.
on every syllable.
Every syllable, and every word is supposed to be very measured about what they're saying, especially in the FOMC. And what's happened is that the bond market, which is trading under 2%. I mean, I can't believe it. I mean, hell, I remember when bonds were trading at 14%. And we had 21% T-bills, and now it's like 0.15%. It's just unbelievable what I've seen in my career. And what's happened is money it continues to flow in the system. It apparently is continually getting misplaced, because what we're seeing is an enormous Fed facility in the reverse repos. And yesterday, for the first time ever, there was reverse repos of $1 trillion. One day. With a T. And the Fed has announced that they're setting up a permanent $500 billion Fed facility for repos. So the thing is that there's money out there, but it's in the wrong hands. It's in the wrong place. There's no velocity to it. And we're seeing huge mismatch. And it's like, we keep talking about this. Something's going to happen. Don't know what's going to be, but it ain't going to be pretty.
Yeah.
And just got to watch this. But, we're talking $1 trillion. In 2008, when the whole thing went in the tank, they used $787 billion to bail us out of 2008. We just used $1 trillion last night in a Fed facility. So, I mean, whatever's going on, it's big. Got to mind your P's and Q's. Keep your powder dry as far as I'm concerned, especially in the bond market.
Okay.
Because I wouldn't be loaning money to those clowns in D.C. at 1.87% for 30 years. There's no way I would do that.
Yeah.
But what do you do with your money if you've got to do that? So, at any rate, it's really interesting. Persistent inflation. We're seeing problems with semiconductors, shipping rates. These are really powerful underlying systems that are working on the economy, not to mention the fact that crude oil is up 100% from, the 30s to the 70s.
Yeah.
And of course we see it at gasoline, but yet that ripples like a tidal wave through the economy.
It's a number of things in the economic system.
And of course we just had a big, heat blast. What happened was that the wind died, and they had to fire up natural gas, and I mean it just spiked.
Yeah. As everybody's firing up their air conditioners. Well,
they fired them up, but yet they had to fire up the grid. So it was really interesting to listen to people talking about this, because they said, well, we're going to get on electric cars and all this stuff, but yet you get 95 degrees and you got a high pressure cell over there, the air's dead.
Yeah.
And then what are you going to do? And if you don't have natural gas, it's going to be hell to pay. So, and of course, the ERCOT, like we talked about like maybe 3 months ago, the ERCOT electrical grid is right at its max. So it's more about the population in Texas and everything else working. So it's been very, very interesting. All of a sudden we went from having cheap energy, which I think this is a lesson of when you have $20-$30 crude oil, of how, and of course $2 natural gas, when that ripples through the economy, it's a thing of beauty. Yeah. But yet now we see it at double that, and it's just like carrying a boulder around. So very interesting. Yeah.
Well, aside from the financials, the other big topic of chatter this week was China. What's the news there?
Well, we're going to have a little conversation about China. From a grain market standpoint, remember last week they had the 2 corn cargo cancellations. That was an old crop. What they did this week was, after market broke off a bit, they bought 2 cargoes of new crop. So, the joke around, of course, at, Ag Twitter is, they just did the March SEP.
Yeah. It's like, that sounds like a spread.
Yeah. And what they did was, they bought this stuff cheap. Now they're trading inverses, and they're selling the front, buying the backs, and rolling forward. They're talking about this, that China probably cannot unload anymore because there's just ships everywhere, and they're all sitting out there from Dalian all the way down to Hong Kong. Every port is
jam.
Huge traffic jam out there. And we talk with one of my old students at Indiana who's trading coal, and they've got 93 million tons of coal coming up from Indonesia and Australia.
Wow.
94 million tons. So, it's really pretty amazing what they're trying to get through that system. The other thing that's really, really of interest is that China clamped down on their internet traffic and their internet businesses this week. And it was just, the market just plunged over there. It was an interesting comment because one of the central committee types said something about capital is not going to be making decisions in the Chinese economy. Yeah. So it's like, in other words, the market, it functions, but yet when it gets out of control, we're just going to say done.
Yeah.
And that's what they did because, corn and hogs are just going like this in China. But the other thing is that they're trying to force sorghum and wheat into the feed rations.
Okay.
So what it is central planning that's failed, and to fix the central planning that's failed, they're going to try something new, which is probably going to fail too.
Yeah.
But we all know that because all you got to do is watch Venezuela or Zimbabwe and, those great central planners. But the other thing is that they've cracked down on the internet. They've cracked down on what they call excessive speculation.
Okay.
They just sent a guy in Hong Kong to prison for 9 years for protesting down there in one of those things they had, last year.
Yeah.
And it's really, they're having war games where the war game is where they're going to take Taiwan. And they think the United States won't do anything about it, is what the chitter chatter is. So it's very, very interesting. They're getting a much more aggressive stance. They're seeing the new administration as a very different kind of an animal compared to what the Trump administration was, and what we will do and what they will do.
Okay.
And it's really, with the crackdowns, we're beginning to see, some of this stuff where, I wasn't around the 1930s, but it's starting to smell a lot like it.
What about the 30s?
Well, that was the rise of the Nazis.
Okay.
With the camps and, blaming, everything from, World War I to Jews, et cetera, and, finding the scapegoats and everything else like they're doing in the Uyghurs. And, without getting too much into politics here, because this is trading, but, it does roll over into everything we do in trading in the markets. So having said that, you have to keep an eye on China now because they are working heavily to make sure the markets do what they want in Beijing. So
that's where the market movements have some of the political motivations there, but just keeping an eye on what that connection is.
Yeah. We had beans trading some ridiculous numbers over there in China, trying to get, into the crush. And the people who made a bunch of money, the Central Committee doesn't like that. So, all of a sudden they say, well, we just won't do that. And then all of a sudden, bottom drops out. So, that's the thing about a free market versus a planned market, which is somebody that doesn't like it. All they have to do is, get on Twitter or get on, China Daily and look out. But it's really, this was a week where China definitely was flexing its muscles. And what they're doing is they're trying to see the response, not only the market, but Biden's administration. And of course, the other, people around us, France, Germany, and that sort of thing, what they'll do about it.
Yep.
And of course, Russia. So it's really trial balloon, but this week, they were in the news pretty much all the time, every day in the markets.
Okay, so I'll keep an eye on that. But that's all for this week's market update. Thanks, Q. And as usual, for those of you who are Croptimized Pro subscribers, check out the Croptimized Hedge Report for more detail on what to be watching in the markets for informing your grain sales strategy. If you're not yet a subscriber, you can learn more and sign up at thefarmcfo.com. Thanks for tuning in, and we'll see you next week.